Okay, so good morning, everyone. Welcome to the Macro Snapshot. We are Tuesday, October the 14th, 2025, recording this in the morning. Let's have a quick look and just see what's going on. We had some the big thing which the market's trying to figure out is is the taco trade on. Trump always chickens out, and obviously we know what happened is that the Chinese put some export restrictions and export controls on some of their rare earths. Trump retaliated. Then over the weekend there seemed to be a bit of a compromise. Trump softened his language. JD Vance softened his language, but then suddenly yesterday. And so the market was expecting that, the equities would sort of bounce higher. And in fact, what we get, if we look at it, for example, just the ES, if we look at the daily chart, we see this is the original sort of fall on Trump's tweet. And then yesterday we got a nice little gap open and a nice little bounce. And everyone was thinking that this is going to sort of hit the highs. But what you can see is that overnight, you can see that, the ES futures down about 92 basis points, NASDAQ down about 1.2%, Russell down 1.3, and the Dow down about 66 or so. And so the question is, why is that happening? The market seems a little bit nervous. And let's just have a look here and look at volatility. Volatility hasn't completely sort of collapsed. It has become less. But if we just look at, let's first of all look at overall charts here. So I've got here the VIX, we've got the MOVE, which is the bond volatility, and the CVIX, which is for currency, so for FX. And what you can see is that all of these had been, just gently sort of coming down to very low levels. And then suddenly we had a little bit of a spike up. And if you can see here, we had a little bit of diminishment yesterday of the volatility, but overall volatility has, essentially sort of gone up a little bit more, maybe not so much for the MOVE, which is the blue one, but for currencies and for the overall equities and whatnot, volatility is going up. And if we actually then just look, let's maybe have a look at the VIX curve itself. If I can bring that up, let's have a look at the VIX futures curve. So let's see where that is. You can see here that this is where we are now. And so this is spot. So spot is at 2160. So you can see that the curve, is in a state of contango. But let's say we go back to a week ago, you can see that the curve is a lot flatter. So this is a week ago. You see a very strong contango. So the front of the curve was down. Obviously, the level itself, it was down at 17. And then the first futures was at 18. So now we've got the first futures at, what is that, at 20 and a half. And spot is still elevated. So the point I'm trying to make is that if we compared to a week ago, volatility is still relatively sort of elevated. And the point is, the more this goes into backwardation, that's signaling sort of greater concern by the market. So the point is, the market is still a little bit nervous. And if we just go back to the ES, and let's break that down maybe to a 4-hour chart, just to have a bit more granularity, as people like to say, on it. We can see here that, if you look here at the fib, we never actually got above the 61.8% fib retracement. So you can see here, this is the whole Trump business. And then over the Sunday night, it gapped open. But you can see that the market stalled out here at, the fib retracement here, 61.8. And that's the same for the other equity indices. And I think there's just a concern here that the ball is a bit more in China's court rather than in Trump's court. Trump in the past has wanted to be the magnanimous one. He makes the big threat, and then he, in a magnanimous way, steps back and says, okay, I'll make a compromise because I'm a nice guy. And that's what he's trying to do. He's trying to work out of that playbook this time. But the Chinese released a statement overnight, and this is what's got the market a little bit spooked. I don't want to say in a massive way, but definitely a bit of sort of risk off this morning, is that the Ministry of Finance and Commerce, the FOFCOM, they basically issued a statement essentially saying that there would be no talks as long as the Americans are continuing to make threats. So they basically said, okay, we can keep on talking, America, but you're going to have to dial down the aggressiveness and the rhetoric. And yesterday, for example, we had JD Vance, but especially Besant, Secretary of Treasury, basically, pointing his finger at China and saying they're the bad guys and they're destroying the world economy and we ain't going to take it in the US. And I think the Chinese basically pushed back overnight and essentially said, no talks are scheduled or possible until and unless the US essentially removes the aggressive rhetoric. Not only that, as probably a bit of a symbolic gesture, they also put some countermeasures, various sort of penalties on 5 US firms, sort of almost, I don't want to say at random, but just a symbolic effort to basically say to the US, hey, we're not going to back down here. It's up to you to make a unilateral decision to tone down the rhetoric. And so I think essentially the equity market is noticed all of this and is basically is waiting for Trump to say, okay, sorry, let's get back to the table. So we're going to have to get some sort of some dovish rhetoric coming out of the White House or dissent or almost like a public apology or a mea culpa, I think, for just to give the all clear for equity. So from a technical point of view, as I say, this is now a pretty key level, at least in the ES futures. You see that, there's a bit of resistance here as well. And so let's call it about 6,700 or so. And just on the very short term here, we can look in a much shorter term thing. Hold on, whoops, I've got the wrong one. Let's get that off. Let's just bring the basic fib here. So if you now just go for this shorter term fib here, session disconnected. I love technology. Okay, so you can see here that what's happened, this is now bounced off this 61.8 at 6,609. So it seems as though we have a bit of a Fibonacci ping pong here. The bigger one is about 6,700 and the lower level here is about 6,610. So markets will probably range, possibly between those, just for the moment, waiting a bit more clarity. And I think really in order for this to go higher, the market is looking for, some kind of concession symbolically from Trump or the US side, just to sort of tone down the rhetoric. And that's a similar situation here for everything. So if we look again at some of the other markets, having said that, what is interesting is that we've just had earnings coming out this morning. We had a JP Morgan, Goldman Sachs, and I think we just had Citibank as well. And just looking at some of the headlines, they've been pretty positive from what I can see. That was kind of expected because there's been a lot of M&A activity, mergers and acquisitions and trading activity and whatnot. But we're seeing here Citigroup, fixed income, commodities, currencies, sales and trading revenue 4.02 estimate. So a nice beat there for Citigroup on their sales and trading. Goldman trading revenue was down a little bit, but their deal making, but the fixed income was up. JP Morgan, so pretty good as well. So what about Wells Fargo? A little bit down, but overall it looks like fairly solid. I have to go into the details, but it looks like we've just had some fairly solid beats by the banks. There's a lot of deal making, a lot of IPOs. Trading income seems to have been quite positive. So the question here, in terms of the indices, what we're noticing here is that the Dow is only down 60 basis points compared, let's say, to the Nasdaq 106 or the ES. And so, a little bit more positive in the Dow, which, does have JP Morgan and Goldman Sachs. So maybe that's going to outperform today. And so that's a little bit of good news. So the thing is as well is that we are counterbalancing this sort of negativity in terms of Trump and China with the reality of earnings. And obviously we've kicked into earnings seasons here. So that's interesting. Now, just in terms of that sort of negativity overnight from China, if we go and have a look over in Europe at the Euro Stoxx 600, you can see that also came down. Again, similar kind of situation, had a bit of a bounce yesterday and overnight from Sunday into the fib and now testing lower. So, let's see what happens, because if this doesn't resolve itself quickly, we could start to get some measured moves and get some of these equity indices pushing, completing sort of Fibonacci extensions more towards the downside. In the case of the Euro Stoxx 600, which we have up here, let's say about to 555 or so. So definitely some risk off there. We're also seeing that in something like crude oil. Let's just take the December contract, which I personally am looking at here. You could see the crude oil also had a push down. Again, similar situation, had the risk on bounce yesterday and then push down. Crude oil, there are some more specific and idiosyncratic factors. We had this morning the IEA actually increased their forecast for the level of surpluses, especially in the first half of 2026. So basically the International Energy Agency saying that, the surplus of oil was building as too much production, and, inventories will be expected to rise, and oil not loving that. So, and also combined with that, you've also have as I said, there's the risk off tone of, maybe the trade war is not done and dusted yet. So we still have oil. Now, as you can see, it bounced on the December contract off about 57.5. But again, if it breaks that, you've got to think that it, might even have another couple of bucks on the downside. Maybe that's enough for this morning. It wouldn't surprise me if that consolidates. But the other thing about oil as well, we know yesterday that in the Egyptian resort town, there was this sort of the deal signed, apparently, let's hope so, for a sort of a more lasting peace in the Gaza Strip between the Israelis and the Palestinians. But what we're getting out of that, there was some comments by Trump that, maybe Iran, they have a lot of oil. They could start pumping a bit more oil. Iraq was talking about pumping twice as much oil. So there could be some sort of peace dividend, maybe for countries, especially like Iran, but maybe also on the side Iraq. So the thing is that, maybe there's going to be more oil flooding onto the market. And really, at the moment, from a geopolitical point of view, the only thing which would be a positive in terms of the oil price would be some kind of escalation, let's say in the Russian-Ukraine situation, more sanctions on Russian oil. But in terms of Middle East oil, that seems to, if anything, to be easing and increasing supply. And again, that's going to be a negative for oil. And don't forget that countries like Canada, the newly discovered oil fields in Guyana, and also the oil fields in Brazil are also sort of upping their output. So a lot of ex-surplus barrels are coming onto the market, and we're seeing oil here trade heavy. Also, if we look at gasoline, not as bad because that's a bit more of a domestic situation, but also the gasoline market under a bit of pressure. Okay, so looking into some other things, obviously everyone's been looking at gold. We know that on all kinds of metrics, this is incredibly oversold. This rally now is just your face ripping. I actually posted something yesterday. It's interesting that if you look at, we're in the sort of the 95th percentile of these kind of moves here. So you see that gold taking a little bit of a pause, silver having quite a serious pause as well. The question is, will that be enough? Is that going to be it? Is that the blow off top? It's an interesting one. And also doubly interesting in the sense of the risk off. So gold in this risk off environment might start to outperform, let's say, silver here. And if we have a look at copper, you can see copper also having a little bit of a pause. So the metals, especially the precious metals, which have been incredibly overbought, just taking a little bit of a pause state. So it's going to be interesting to see if they can continue downwards, or if risk off continues, if gold, for example, gets a bid. We're seeing the dollar now, continuing dollar strengthening. We have to acknowledge the fact here. If we put it on, let's just put it on some, whoops, sorry, that's the wrong EMAs. I want my just regular EMA. So we've got the 20, 50, 100, and 200 EMA here. We have to acknowledge here that the dollar seems to be forming a basing formation, seems to have formed a basing formation here. So new lows, then higher lows, retested here, this double bottom rejected, pushed above the moving averages, pushed above this short-term fib level here. And at this point where we're abutting the 200-day exponential moving average EMA. So this is a pretty key test here, because if the dollar, this would be a logical point. You also see here a little bit of overhead resistance around about this 99.5 level. So a very key level here on the risk off. The dollar is starting to regain that risk off haven sort of status a little bit. Is there also a sense here that the Fed, is having some kind of second thoughts about being super, super dovish? Whatever it is, the dollar is regaining a little bit of energy here. And you have to say that this price action here is supportive. We're making higher lows, and just generally we seem to have done the big retest. So obviously with the slight risk off sentiment overnight, we see something like the Aussie dollar, which hadn't had a little bounce, actually continuing on its way down. We see the New Zealand dollar also weakening. We know that the Reserve Bank of New Zealand cut 50 basis points last week. So the Antipodean currency is going down. If we look across at CAD as well, the Canadian dollar also weakening. So all of those commodity kind of risk on currencies under pressure this morning. You say, well, okay, what about Europe? So if we look at the 6E, so the futures here, Europe not down as much. Now, talking about Europe, there's actually, we'll just have a quick look here at the Swissy as well. Not down nearly as much because of the safe haven, and Japan, if anything, up a few basis points, not a heavy thing. But basically, Europe as well. We have the new government of France, the same Prime Minister, Le Cornu. He's giving a statement at 2 o'clock European time this afternoon, trying to get the budget through. There's talk of him trying to reduce the budget deficit, to 4.7% by the end of 2026. So Le Cornu is kind of trying to juggle, but the opposition parties, the socialists and the left wing, and the what's it called, the National Rally on the right wing, they're saying, oh, we're not sure. So there's still a high probability or high possibility of a no confidence vote happening at the end of this week, and maybe this government falling again, which would be the sixth government which has fallen since Macron called the general elections just before the Paris Olympics in 2024. Point being, there's still a lot of uncertainty in France, and that is weighing on the euro, is what I'm trying to say here. And so, if we just have a quick look, I'll just go and look at the other charts here. I would just want to look at the bonds over in Europe. So if we look at something like the Bund, you can see that the German bonds here, you see the Bund pushing much higher risk off. There was a low ZEW, sort of sentiment index this morning. So the German bonds pushing higher. If you look at the very front of the curve, you also see that pushing higher. If we look at the BTPs, excuse me, the BTPs in Italy pushing, breaking out of this kind of triple, quadruple top here. So very strong. If we look at the OATs, also strong, but I just want to look at the spread here. And you see the spread here is starting to tick up over the Germans. So, all of the bonds having a bit of a push this morning, but the French bonds are underperforming against the German and the Italian bonds. If we look at Italy versus France, you could also see we're essentially almost like negative now. So that's the premium there. So the French situation, is sort of just being watched by the markets. And I think if we were to get some sort of fall in the government by the end of this week, we could see the French bonds under pressure again, and the euro itself under a little bit of pressure. And then, of course, the other thing which we have to not forget is Powell. So we have Powell speaking today. Let's just remind ourselves when and where. Now, the Fed is going to go into its blackout period. Keep in mind that the Fed, let's just remind ourselves of where we're at with the Fed. So we have the meeting on the 29th, which is obviously 2 weeks away. So the Fed is about to go into a blackout period where, there's not really any sort of public announcements. And so this conversation today, and let's just have a look and just see, I think it's at 12:20. Just want to have a look here. Powell is sort of a relatively late insertion into the calendar here. So I'm just going to have a look here, central banks. So we have a lot of speakers. So we have Bowman, this is Powell at 12:20 today. It speaks on economic policy and monetary policy, economic outlook and monetary policy. So the point is here, this is not going to be just a little cute, commencement speech and a cup of tea. This is Powell's opportunity before the next FOMC meeting to signal, to confirm, what to confirm, what the market is pricing, let's assume. So that's 25 basis points. So a full cut coming in October. And then, of course, there's a second cut, 49 basis points, so 1.96% cuts priced by December. So the thing is here, the market is expecting absolutely a cut at the next meeting and basically another one in December. So if Powell doesn't like that, this is the moment to push back. On the other hand, which I think is going to be, that would be very unexpected. On the other hand, what could be interesting, is there any chance at all of a 50 basis point cut in October? That to me seems probably unnecessary. We have stocks, they've come off a little bit in the last few days. There's a bit of uncertainty. VIX is a little elevated. The bonds are up. But at the end of the day, this is still a pretty strong economy. Having said that, as we all know, we haven't had any official data for unemployment or CPI or the labor market or the general economy. We know that some members of the BLS, Bureau of Labor Statistics, or the Department of Commerce, have been called back, even though the government is shut down, and are working on numbers. So who knows? Maybe the Fed and Powell actually have some of the numbers for the labor market, maybe for the general economy. Maybe inflation is looking relatively benign. Maybe unemployment rate has gone up and the labor market has weakened, and maybe the general economy is showing signs of weakening. Point being that maybe Powell and the Fed has a little bit more information than has been released publicly. And if Powell is concerned about, a sudden weakening of the real economy or the labor market, who knows? Maybe he's going to hint. It's possible. I think it's low probability, but it is possible he may hint at a 50 basis point cut today for the October meeting, just to prepare the markets. If that's the case, obviously that would be a negative for the US dollar, positive for the bonds, positive for gold. And for equities, I think relatively positive, because are we at the point with equities where it's just purely running on monetary policy and Fed rate cuts, and that would be a stimulus? Or is there sort of some creeping concern that, if the economy really is weakening and the labor market really is weakening, that actually this is sort of a bad news is bad news scenario rather than a bad news is good news scenario? Anyway, important speech to listen to. Let's see what Powell has to say. I'm not sure if he's going to release remarks before that. And he may do sometimes in these situations at these sort of more private meetings. he does, release headlines or remarks, the statement just a minute before. So personally, I'll be tuning in from about 12:15 or so. Okay, guys, I'll leave it there. Have a great day, and we'll continue this tomorrow, no doubt. Thank you.